Hey NIO fam, hope you're all doing great and buckle your seatbelts because today we're diving into a fresh scoop on institutional moves and how they tie into the turbulent tides for NIO stock. So here's the major headline. WMG Financial Advisors has boosted its stake in NIO by about 17.9% during the dip on Friday. Before this bump, they already held a significant position, and after adding 72,170 shares, their total climbed to 474,966 shares. In dollar terms, that's approximately $1,629,000 tied up in NIO, making it the 29th largest holding in their portfolio, representing about 0.6% of their total assets. Now, this move is interesting for several reasons. First, institutional adjustments often hint at shifting sentiment. When a firm like WMG boosts its exposure to a company, it suggests confidence, or at least a bet in this company's near to medium term prospects. But 17.9% is not trivial, it's a meaningful adjustment. It tells us they see more upside or less downside risk now than before. That said, institutional ownership overall remains less than 50% of NIO's total outstanding shares, giving room for individual traders and retail investors to influence volatility. So that's the insider/institutional landscape. But what about the external backdrop? That's where things get spicy because NIO stock has recently taken a hit, falling about 10% amid renewed fears of tariffs on China. Let's break that down. The U.S. has floated threats of more aggressive trade measures against Chinese goods, especially technology, consumer goods, and parts. These tariff threats send jitters through the market, and stocks with China exposure often get caught in the crossfire. NIO, being a Chinese EV company with operations, supply chains, regulation risk, and investor sentiment tied to China, is particularly susceptible. So when markets get spooked about tariffs, Chinese equities and Chinese adjacent stocks tend to underperform. That's likely one of the factors driving NIO's 10% slide. In other words, the institutional buying from WMG and its peers might be trying to catch a dip or position ahead of a recovery while the broader market's fear plays keep pushing volatility. If you found this breakdown helpful, don't forget to smash that like button, drop a comment with your thoughts on WMG's move or where you see NIO heading next, and of course subscribe if you want to stay ahead of the curve with more updates just like this. Stay sharp, stay invested, and I'll catch you in the next one.